Sure. My name is Phil Kessler. I'm the founder and managing partner of SWS Partners, which is an investment and asset management firm in Columbus, Ohio. Met Mark through a mutual friend, some Ohio business contacts before the coronavirus became a thing. So it's been a good relationship, from a long distance from then. So yeah, this, as it's interesting. You have to reflect on 2020, which I think is a bit of a loaded question, because I think it's hard to do it and not feel just a wee bit jaded about it. But the thing that's I don't know if it's good or bad, but if you look at it from a business cycle standpoint, at least what we see both on the private investment side, which we do, and the public investment side, including some institutional clients, is that we made a lot of bets on our investments, frankly, going back prior to 2020, on technology-enabled disruptors was the term we use. So just companies that maybe weren't tip of the tongue or known that were doing some interesting things behind the scenes that we felt like we're going to have promise down the road. I think what we realized with, at least especially in the spring with the initial lockdown, is how much of this technology has been brought forward. Right. And Zoom, like we're using now, is probably the most extreme example that you can think of. But if you look at, for example, the stock market, and people keep wondering about that, and all these tech companies that were sitting there with technologies that have been utilized so aggressively over the last, say, 8 or 9 months, those were in process. It just got accelerated, right? Everything happened faster, sooner. And if you were correctly positioned for that, then you benefited from it, like our firm did. If you were not correctly positioned for that, like say a big swath of publicly traded retail fashion houses in Columbus, Ohio, that we've all heard of, right? This is ground zero for your typical mall store. Many of them don't exist anymore, or don't exist in the form that they did prior to March of 2020. So I think for us, it was just a bit fortuitous that we were already thinking about what was next, and what happened over 2020 was just to kind of accelerate that thinking. And it's created, it's like any dislocation. There are folks that are properly positioned for it, and there are folks that aren't, and that's how balance sheets get rearranged. And it feels good if you're on the right side of it, not so much if you're not. But yeah, I think this is going to be one for the record books. It'll be interesting, to look at this a few years ago and say, my phone is ringing.
And then going forward, what's your outlook on 2021?
We're reasonably bullish on it. I think it depends on the sector that you're in. I don't see much changing in the public markets. There might be some rotation. I think some of your publicly traded companies that who got hammered, whether that's entertainment or shipping or whatever it might be, airlines, are going to look pretty good. But if you sat down with me today and asked me if Amazon was going to be worth more next year than it is this year, I think it's the case. So it's from a publicly traded stack, I think as long as you're betting on the stuff that's out in front, I think there's more of that to come. Because again, part of that's being driven by what happened in healthcare and the realization of what is possible, that we probably didn't realize what was possible. So we feel pretty good about that. And on the private equity side, money's still really cheap, and it's going to stay really cheap for a long time. So, I don't foresee that marketplace slowing down at all. I think the deal flow is going to continue to accelerate. I think the amount of private money that is available is going to continue to accelerate. So yeah, we'll see what happens and what sectors get targeted, but I think cheap money is here to stay for the near future, and that's going to have some ramifications for private investing.
And what about on the philanthropic side? Is there a particular philanthropy or charity or social development goal that you're focused on for 2021?
Yeah, that's a good question. I mean, for us, actually been fairly broad support. We kind of felt like many of these charities, whether it's the food bank or the zoo or whatever it might be, or you kind of give to everybody because everybody's hurting. So I think it's just a matter of for us has been fairly broad-based support of just understanding that these things are important culturally and you don't want to see them go away. Especially the ones that require a fair amount of public input and they can't get it because of lockdowns and minimums and that type of thing. But we did put some money behind police training. There's a charity that provides kind of much higher sophisticated training for police officers beyond what they get in the academy. And that was pitched to us as by, frankly, current and former police officers who were worried about this state of things and saying, look, part of this is a training issue, right? If the more and better training you have, the less scared you are on the street and the less quicker you are to do things like pull a gun. So, it's just a matter of saying, okay, it's okay to point out the issue, but at some point you got to put your money behind saying, okay, how do you address it? How do you fix it? So,
and how can we be most useful to you? What are your asks in terms of the kind of deals you'd like to see, maybe some capital for your platform, or you're looking for talent, or otherwise?
It's a great question. I think a little bit of all of that. We are a Midwest-based investment manager. When I say that, I mean, we actually manage money. We don't build and outsource portfolios to other money managers, which is the typical for this neck of the woods. When somebody says I manage money, they typically mean I give it to someone else to manage and I run an asset allocation, which is fine. It's just not what we do. So, if you think about the fact that we have a true institutional investment platform, and a lot of institutional investors are looking to money centers for that type of approach, right? Which has historically been where you had to go look for the types of things that we're doing now in town. So, we're always interested in meeting endowments, foundations, pensions, any of the folks that are looking for a different way of thinking about investing for the long term. And on the private client side, I think, or in the private equity side, I think it's very similar. The Midwest is becoming more interesting to folks with money. We have deal flow that we know about here. And so this one of the things I've gotten the best out of this is I was having some phone calls over the weekend with some compatriots we've met through 361 about maybe an interesting deal that we're putting together here. And it's going to require fair amount of money. And so you have folks on the coast, in this case, and in the Northeast, who were looking for this particular type of investment. We're like, hey, we got one. If there's something there, then, we can talk about structuring something. So I think all of that, again, kind of we're very keen on raising the investment. I don't know what the terminology is. I'm looking at the ceiling profile of this area, right? I'm staring at my CIO and a portfolio manager who managed $4 billion at the 12th largest pension in the country, right? Having access to those types of guys hasn't historically been what's here, and the ability to put together a private equity deal to potentially carve off a division of a publicly traded company. Those are kinds of things that are available here. And you just got to know kind of what rock to look under at times. But historically, both of those entities have picked up the phone and called an iBanker in New York, or called BlackRock or whatever it is, and say, hey, this is what we need. So that's really has been my drive, and what quite frankly, the advantage we've pulled off of being involved in this group is just getting access to national and in some cases global level capital that's looking to deploy, and they don't really care that it's Ohio versus California versus Texas, right?
Well, they should, but we'll talk about Ohio. Separate call. We're going to do some things in Ohio, definitely. And then what's your one word for 2021?
We've been using embrace, right? Because whether it's good or bad, you just got to embrace it, right? You can't hide from it, or you can try to hide from it. So, one of the things one of the advantages of having the gray hair that I have and being around as long as I've been around and has been through as many investing cycles as I've been through at this point is it's going to happen, right? You can get angry about it, you can get frustrated about it, you can be depressed about it, but it doesn't mean it's still going to happen. So just embrace it. Doesn't mean you're going to have fun, doesn't mean you're going to enjoy it. But if you take that mentality, you don't get too high, you don't get too low, and you just keep grinding it out. Maybe that's a very Midwestern approach to doing things, but I think long term, it gets you to the other side in a heck of a lot better mental state than otherwise.